Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from American Century. Seems like they're managing a lot of money, probably much more than you or I. But spoiler alert, it hasn't been a smooth 6 months for them. We will see why this report contains some interesting details. If you're interested in funds and investment strategies, remember to subscribe to get more corporate insights. Also, come chat with us on our Discord server. The link is in the description. Today we're looking at the semi-annual report for the Global Real Estate Fund. This is a report they send to their investors twice a year, like a school report card, but for grown-up finances covering the 6 months from November to April. Let's decode it. First up, let's talk about costs. For the investor class, if you had $10,000 invested, you'd pay about $54 in cost, which is 1.1% of your investment, which is normal considering the fund invests in real estate all around the world. Essentially, for every $100 you have invested, about 1.11 goes to covering the fund's expenses every year. The other classes have different expense ratios, with some as low as 0.76% for the Y class, which is a pretty good deal. Now, fund statistics time. The fund manages about $832 million, big money. The management fees paid for managing that money over the last 6 months were $1.8 million, which is a pretty good chunk of change, right? The portfolio turnover rate is at 70%. It is a measure of how frequently assets within a fund are bought and sold by the fund managers. This means that the fund is actively trading its assets. More trading could lead to more profits, but comes with more fees. Finally, the fund has holdings in 66 companies. Now we will see where the big money of the fund is. Most of the fund's investments, 98.4%, are in common stocks, but short-term investments make up 3.5%. Most of the geographical exposure is in the United States, sitting at 66%. A decent chunk, around 8%, is in Japan and Australia, other smaller stakes in the UK and Singapore. Okay, now we are going to switch funds. They're from the same company, but it is time to take a look at the real estate fund, same company but different fund. What were the fund costs for the last 6 months for real estate fund? For the investor class, if you had $10,000 invested, you pay about 56 to, again, very standard. The other classes have different expense ratios, with some getting as low as 0.81%. That's for the Y class. This is pretty good. This new fund manages about $593 million, and management got paid $3.2 million to manage the money. The portfolio turnover rate is a bit lower, 60%. This one has 41 holdings. Similar to the previous fund, almost all investments, 99.110, are put in common stocks, and short-term investments total 2.1%. Looking at sectors, healthcare is the top sector at 18%, again a good chunk, with residential and telecommunications following. So basically the fund tries to give more exposure to high yield sectors. That covers the basic details in the report. Now let's analyze what this means. Alright, so the fund experienced an increase in assets to $593 million. The management team, led by the president as the Code M, made a lot of decisions there. The overall strategies and performance heavily influenced these figures, as there weren't many movements and activities in the last year. We can see high portfolio turnover rate sitting at 70%, suggests that managers are very active in the trading strategy. Lastly, the financial highlights give us a clear snapshot of per share performance over to the last few years. The total return for the investor class in 2024 was pretty good, 33.4%, but for the first 6 months of 2025, they saw a negative 3.62%. This negative trend highlights a challenging period as high turnover period. As high turnover period, as high turnover period, as high turnover rates aim for higher returns. For 5, they saw a negative 3.62%. This negative trend highlights a challenging period as high turnover rates aim for higher returns. A breakdown from American Century Investments. Now, my take based on these numbers is that American Century is struggling like many other players in the market. We are seeing some high fees and bad decisions, and it would be hard for me to promote them and suggest them to our viewers. It would be like suggesting people join something I don't. That's my take on just one opinion. What are your takes on these numbers? Drop your thoughts in the comments. If you found this valuable, hitting that like button really helps, and subscribe for more deep dives. Also, don't forget to check out the Discord in the description so we can discuss that even further. Thanks for watching, and I'll see you next time.